Okay, we are live with my little brother, Nicholas Caradza, and Russell Wescott. And it's a pleasure to have Russell here because I think, Nick, we were just talking about 10 years ago or 15 years ago. I just feel like I've heard Russell in my ear at some point on a CD somewhere where he was talking about real estate. I couldn't even tell you exactly what specific the topic was, but I'll tell you the impression that you left on me was that you took this stuff very seriously and you had a real balanced viewpoint on what real estate was and wasn't. And I appreciated that about you because I think at the time, Nick and I were listening to a lot of like American stuff, and it was like, become a real estate millionaire. You start on Friday, by Monday, you're a real estate millionaire and stuff. And
with no money, no work.
Yeah, no money. No money, no work. It's easy. It's passive. So you kind of represented like, oh, there are some sensible people in here who have some opinions. So I kind of always appreciated that about you. So thank you for being
You're welcome. You're welcome. Well, we probably go back to the days of cassette tapes, by the way. That's probably where we first cut our teeth on a lot of those kind of things and that kind of stuff.
And just you saying that, it's flashing me back to, I bought some cassette tapes from Robert Allen in a box for $5,000. The box came to my porch. My dear wife thankfully let me spend this money on this box. And I remember listening to all the tapes about real estate. I'm like, oh, I kind of like already know a lot of this stuff. And some of the stuff in Canada I don't think applies. But there was one tape where he explained how to do public speaking. And to this day, it was some of the best tips I've ever received were from this box of real estate tapes. That was this little subsection of cassette tapes. And I had to buy a boom box or whatever you call them from Zellers to play the cassette tapes because my Honda Civic at the time, it didn't have power windows and it didn't have cassette player. So I had to buy like a boom box. And is that what you call those? Boombox?
Yep. Yeah, something like that. Yeah.
Man, are we ever dating ourselves? Boom boxes, Zellers, Honda Civics, and then my tapes.
And I would play them, and then my friends would come in when we go for lunch because back then I was working in tech, and
you'd have to move the boom box.
Yeah, and they're like, "What are you listening to?" I'm like, "Oh, never mind. You just don't worry about that kind of stuff." Or some I would tell, and they're just like, "You're completely crazy. Like you work in the tech industry, and you're talking to me about Hamilton cash flow. Like, have you lost your mind?" Anyway, so I don't know if I know the origin story for you. How did you, we'll get to some of the other things I want to talk to you about, but how did you stumble into real estate in such a major way in your life?
Oh, well, thank you very much. First of all, guys, thanks for having me. I'm honored. Honest to goodness, I've watched and listened to your podcast for years, and to be sitting here in the hollowed halls of the Rockstar podcast with the Electro Voice 320s, the Audio Technica headphones.
That's right. We're big time.
And I just want to also say to you guys as well, is when you gave me that tour through the office, every person, big giant smile, everybody was on fire, everybody was friendly and happy, and it's just you guys are creating an amazing culture here. You could easily feel that within a 15-minute walk through here. So just wanted to acknowledge that. So leadership starts at the top, and they inspire you at the same time.
They do.
Yeah. Well, simple story, I guess. But most people's stories. Mine started at the turn of the century with real estate. Fancy way of saying the year 2000, right? I had one of those birthdays that started with had a 0 at the end of it. I was turning 30, and I was working a corporate job with Saputo as one of their national marketing managers, and thought I had everything going on. Had the fast car, the Cobra SVT convertible, flying down the road, wind whipping through my fingertips,
Not
and
hair.
I had no hair at that time too.
And what city are you in?
I'm in Burnaby, British Columbia at that time. And really nothing was really going on. And then all of a sudden I was feeling one of those, well, what am I going to do? Like, I'm 30. Like, what is the next purpose that I want to do? And where does any 30-year-old man or 30-year-old young man go to for guidance? You go to Oprah. And I was watching an episode of Oprah, and I saw Robert Kiyosaki on it. And he talked about this concept called passive income and cash flow and all this kind of stuff. And so I picked up Rich Dad, Poor Dad. I went to a conference, the Canadian Rich Dad. I don't know if you ever heard of Darren Weeks way back in the day. I don't even know if he had I don't even know if he had permission to use that name, to be honest. Went to a conference. I kind of got the bug on the whole entrepreneur. At that time, I was living in a basement suite, renting with a roommate. I'd never bought a property in my life, and I grew up in a mobile home in Saskatchewan over the years. So dove headfirst into all the rich dad stuff, and the Real Estate Riches book by Dolph DeRuse really kind of stuck. And then at that time I met Don Campbell, and I learned from a cassette tape, I learned how to analyze properties.
And was that RAIN already running at that time?
RAIN was running at that time. And it would have been, I bought my first place in fall of 2002. So I took a year and a half to kind of just educate and learn the process, and bought my first place in Edmonton, Alberta. I was living in Vancouver, bought my first place in Edmonton in 2002, and I've transacted more than 100 places over the years, and have written books, co-authored of multiple books, have delivered over 1,200 live stage presentations over the years, and I enjoy helping others, and I'm in a point now in my career where I'm starting to give back all the things that I've learned over the years to then help the next generation of people just coming into this business. Because I think there's some like what you guys are providing, there's some leadership that's required to help people out. There's a lot of people that are just 5 years or less in this business, and they have only seen one market condition, straight up and 0% interest.
Yeah. And buy anything at any time, and automatically it works.
Yeah.
Right? Yeah.
Or you meet them at an event and they're sitting there, they're all dejected, and they're going, "Oh, it's been 3 months and I haven't made $100,000 yet. Yeah. What is wrong with real estate?"
It's over.
Like, honestly, the cycle should be 3 to 5 years to make $100,000. It shouldn't be, in months.
In our old
years.
offices, so not where you're sitting here today, but in our old offices, some people would come in and tell us we didn't understand real estate. They're like, "You don't understand how to make real estate money fast. Like, you guys don't know how to do it the fast way." And over the years, we've always been kind of told that. And I think because of our own family story of almost losing everything in the 90s, we were like, yeah, we kind of like the way we're doing it right now, and we're just going to stick with this way.
Yep.
Slow, steady, boring. But over the years, I'm sure you've had people throw jabs at you saying, you're not into the latest craze, or you don't really know how to make money quick, Russell.
Well, I took a path, and I once I got the bug of real estate, I went for about a 5-year stretch where I bought about a property a month for 5 years straight. On average, not every month.
So you were raising the money?
I was raising the capital, I was doing joint ventures, raising money. I was, ego was getting out of control. I'm on stage, I'm sharing everything. Here's what I'm buying here, here's what I'm buying there. And it just, and I joke and I say, it sounds very impressive, a property month for 5 years, but it was the stupidest thing I could have ever done.
Because of the leverage?
I grew way too fast. I didn't backfill it with the right infrastructure. I didn't have the right people in place. I bought bad properties that had bad tenants in bad areas, and I'm still paying for it in some respects. In some cases, I was, it was all about the thrill of the transaction and not the long-term sustainable asset that will grow and support our family.
Interesting.
Yeah,
and I'm on stage. I'm teaching this stuff, right? I see that. When you go back and you reflect upon the career and stuff like that, I 100% made a lot of those mistakes early on, and don't get me wrong. I don't regret one thing I've done. Most people actually are fear and don't do anything. I went the opposite direction. I went too fast, too quick, too far, and then you have to just scale it back and you find out what your lane is and what you do best.
Yeah, but it's interesting you can share that, I think, openly with people, whereas a lot of people that even take that path, they'll continue down, they'll have a difficulty saying that maybe I should have done it a different way. Because in real estate, I think often in the investing world, it's often, how many properties do you have? And it's always about how many doors, how many properties. And to your point, that's not that's not the barometer that equals success or not. And it's different and there's not one way to do it. Like maybe for someone else, that is the best way to do it. And that would have been the best portfolio, but it's just not. And it's cool that you can sit there and kind of share that with people now versus being, there's people that just can't get past their own ego, and they would have to say, well, it was right, and here's why it was right, and they wouldn't share kind of like just openly about it, like, hey, maybe I should have kind of done things differently.
Well, that's at the time, and that's one of the things I do with a lot of my coaching clients is when they're on fire, I get out of their way and let them keep going. But we have every time they transact a property, we do a recap and we do a circle back and we just say, is there something you could change, something you can do different? We just really check in before they get their next one. Because that's what I did not do at that time. I was just on to the next one. I wasn't checking in to just see if it was working. I lowered my standards at that time, right? And I didn't know what my standards were. I was figuring it out on the go.
Sure.
And you're still new in the business.
What was the... usually in that kind of story, so thanks for sharing that, as Nick's saying. And what was the low point? Like, what was the moment where you were like, usually in those kinds of situations, you hit that point.
Yeah, there's like a
point of reflection. What was it for you?
Well, for me, it was, a market downturn. So was running really fast. The market was taking care of everything for us. It was going up in some years. It was going up 74% year over year.
Oh, wow.
It was fixing all the issues.
That was Alberta?
This was Alberta. In 2004, 2005.
That was like the oil runs. Yeah. That was that era.
You remember those times?
Yes.
It was
crazy.
It was ridiculous.
Yeah. I remember some of our tenants leaving Hamilton to go work in Alberta. They're like, screw this place.
Yeah. People were coming into events and they were, it was really high. Egos were really high. And the best analogy I used was the market went to Vegas and it went on a bender. And then the bender ended and you have to come back home with a hangover and you got to get back to work. Right. So the time for me, and I can almost remember it, I think it was either 2007, I think it was 2008, August 2008. And the headline in the paper said the real estate market finally starts cooling off. And that was 2008. And in some cases, the market has not recovered since. I have bought properties at that time that are still not the price I paid for them 15 years later.
Wow.
Right. And so to answer your question, what was the moment? Was the moment when the market turned, the tide went out, some tenants left, and my rents were at $1,400, and I had to rent them for $1,000 in order to keep somebody in. And then when the cash flow got extremely tight, you don't have a lot of money to throw at the properties in between tenancies. It gets a little bit more run down. You then take a pet the next time. It gets a little bit more run down, and it's a slippery slope, right? It's a really slippery slope where that's where I'm very mindful of pauses in marketplace, as long as there's still some fundamentals to backstop it before it starts taking off again. Is that I'm just very mindful. And I started advising some of my clients in February of 2021 to start paying attention to Ontario and British Columbia. It might be time to pull some chips off the table in Ontario and BC. Get rid of your dogs. You're going to have no problem, like your dog properties, not your woof woof dogs. Get rid of your dog.
And every real estate investor has a dog property or two that just drives you up the wall.
And the analogy I use is there's in everybody's portfolio, there's 20% of your portfolio is 80% of the pain in the ass. And what is your 20% and that was a perfect time to start maybe fixing them up, getting some tenants out, maybe getting tenants up, raising rents, and then selling it at that time. And then pull your chips off the table there and then move it back to the Alberta marketplace. Because I was seeing the fundamentals start to take off again in Alberta at that time. So
wow. So much to ask you there.
Yeah.
I guess what would you now... I'm just curious, first, the fundamentals back in Alberta, you were just seeing what population trend change, some jobs start opening up, that kind of stuff are you referring to?
Well, I'm going to steal a quote from our good friend Ben Rabideau, who wonderful resources. Yeah. Sometimes the cure for low prices is low prices.
Yeah, got it.
The price had been flat for a long time. It had been low enough. It's affordable enough that people were starting to move back. Mm-hmm. And you're starting to see in other markets across the country, you can buy an $800,000 townhome in where I live out in Coquitlam or Oakville. I don't know what the prices are exactly out here, but you're paying $800,000 or you can buy an $800,000 triplex or fourplex, brand new construction in Edmonton and get like $9,000 rent out of it.
Mm-hmm, got
right.
it.
So the fundamentals were just starting to line up. I was starting to see the population growth. The Alberta government, whether you align with their philosophy or not, was just getting extremely aggressive marketing come to Alberta. And that's something I said they should have been doing for a long time. Mm-hmm. Like there's there's no land transfer taxes. There's no PST. They pay $1.40 for a liter of gasoline. Liquor taxes are low. If you rented a hotel room, you're paying like $80 a night. It's just very affordable.
Russell's an advertising. Yeah. I think the Tourism Board of Alberta and the Investment Council of Alberta has sent Russell here on some.
We saw when COVID hit, because of cost of living, or I mean, not just because of that, but one of the reasons, then flexibility. Alberta was a huge benefactor of that, and then also on the East Coast. Yep. Right, a lot of people moved out to the Atlantic provinces as well, and they're still working for Toronto companies. I myself, our family, knows about 4 different people that are in that situation. They come back once a month for a few days, and that's it. And you've seen it with the real estate prices and the demand in primarily in those 2 areas in Canada. Whereas Vancouver and Toronto have taken more of a hit. Because of where things were, they were ridiculous.
Well, I sit there and I go, we have 3 adult children, 20, 24, 22, and 19, and all 3 still live at home, and we don't ever want them to leave eventually.
Sure.
But so we sit there and go, and our 2 oldest, they want to leave, they want to move out, they work locally. My son works for the city of Coquitlam, makes $30 an hour, and he sits there and he goes, arguably he has down payment for a property, and he's going, well, how am I going to afford a mortgage payment on a $800,000 townhouse? And they're going, we just can't afford it on a $30 an hour job, right? I'm selling a place in Edmonton, a nice 20-unit half duplex, 3-bedroom, 2.5 bath for $209,000, right? So you can buy 4 of those.
So distorted,
right?
Yeah.
So I've encouraged them to take a look, but at the same time, you have to do what you have to do in order to make it go. I still see lots of good fundamentals in British Columbia and Ontario. Don't get me wrong, I'm not down on those markets. I just saw that the prices outstripped the underlying fundamentals.
Sure. Yeah.
And it went too fast, too far, and it needed to take a breather, it needed to take a breath, and it's taken a big one right now.
Yeah.
Sorry, Nick.
No, I was going to say, just like how that's what happened in Alberta, right?
Yep.
Because they had that massive run. Anytime you outpace the kind of long-term trends, provided the fundamentals are still there, if immigration numbers don't completely change or whatever, it had to come back to kind of reality. We were getting 50% increases year over year. It's just
in Christmas. I remember everyone kind of had a break at Christmas in January. A bunch of people came back into this office, and I remember it was Andrew asking me, he's like, Tom, I'm just running the numbers here. Have prices really gone up 30% since the beginning of December? That was 30 days.
In some cases,
and he's and we're looking at the numbers. We're like, kind of looks like they have. And that's when we were basically screaming at the Bank of Canada back then. They didn't raise rates in January. We were literally screaming raise the freaking rates. And they waited until February, and then they kind of lingered, and now they're operating. You just get these market distortions that are so wild. Anyway, that's a different topic. But Russell, so for someone that's going through this now, what can they learn from your experience? Something we're sharing a lot with people, even on our own team, is that liquidity matters. You can have the best assets in the world, but if you can't make that next mortgage payment, did you ever get to a liquidity problem when with what you went through, or were you able to always make the mortgage payments and hang on to everything?
Yes and no. So the simple answer is yes. The no answer is I should have divested of some really bad properties at the time, and
you waited too long.
I waited too long. I should have divested of some properties at that time and moved on with a few of them, some of them, and then sometimes the market will not take care of itself, right? Very quickly. Sometimes it takes a long time, and maybe the best way I'm going to answer that is maybe a story out of a client I'm working with out this way. They bought a place up in Alliston, Ontario, and they've done very well over the last few years. Let's call it they've burned up $100,000 per year since they've owned it. And they sit there and they look at it and they go, now, geez, our rents are $600 below market. Yeah. We can't raise them. We get 2.5% next year, or is it 2 out here?
Oh, it's every year is different. It might be 0.8.
Yeah.
You never know, Russell.
And they're sitting there going, but we can't do anything to the property by adding another unit or anything like that. Arguably speaking, they should have sold it about 6 months ago, but they put it up on the market now, and they got a couple offers. They priced it reasonable. They made good money from it. They're taking the money from that. They're paying off their principal residence mortgage. They're saving a couple $1,000 a month in after-tax mortgage payments for their principal residence. And then they have access to all that capital, and then they're redeploying it into a new market that has a greater chance of cash flow. And also that probably at a beginning of its market cycle. Right. Cool. So to succinctly answer your question is what I advise people to do is I use the formula, I call it the ICE formula: up the income, down the cost, extend the amortizations, or the up, down, sideways plan. Mm-hmm. And so I've outlined a whole pile of just ways of how do you maximize your income from your properties? How do you cut your costs to the bone in some cases? And how do you strategically position your mortgages? Do you need to get into some interest-only financing? Do you need to get into, buying down some debt, pay off some mortgages with some capital to free up some cash flow? And it's not a swear word to have free and clear properties. Like, honest to goodness, I tell people...
Nick says that all the time. Yeah.
People think that they look like I have 4 heads when I tell them, and I actually build a model out for people. I call it the 3-2-1 free program. Buy 3, sell 2, keep 1, free and clear. 3-2-1 free. So if you need $100,000 of passive income through your rental portfolio, you need to buy about 9 places with the suite, hold them over a course of time, let's call it 10 to 15 years, sell off 6, keep 3 free and clear, and you will have about $100,000 a year income stream from that. And that's just that nice pace that, slow and steady. And then when you've got that, people say, well, then I'll just go borrow against that. No. You take those 3 properties, you build a moat around it, you asset protect it. You asset protect it, and then you protect, who you protect it from the most? You. Yeah. From borrowing against it, and you have that golden goose that just keeps laying the $100,000 a year. And then what do you do at that time? You go build another portfolio. You do something else, right?
But when you go to the real estate meetups, people ask you how many properties you have, and you only say 3, or if you say like you're not good.
Yeah, God forbid you say 1. Oh, we're like, oh, really?
Oh, only 1.
And I think, Russell, honestly, that's what's kept. I think when we were starting this business, we always believe in what you're saying right there, and I think it's because of what our family went through in the early '90s. And when people would ask us these questions, I think we always felt a little bit like, oh, you're kind of judging us based on the doors or properties that we own instead of how much leverage you didn't ask me. Like I noticed that you didn't ask me how much leverage I have and how much monthly cash flow I have in my pocket. And it made us feel like we were an island to ourselves a little bit. And that's why we just kind of put our blinders on and built this business. We're like, I don't know if we fit anywhere. Yeah. Like we were thinking at that time, this is the 2000s. We were like really different a little bit. Yeah. And I'm sure there were other people. I just mean it didn't.
And we were using, we used leverage.
Oh my gosh.
Like
that's part of that phase that you were in of acquisition.
Absolutely. 100%. Yes. Yeah. To be clear.
We didn't feel like we always, like every time we were able to refinance a property to access the capital, it wasn't like, let's do it. Yeah. It's like, well, you know what? And we were fortunate too, because we had income streams as multiple different income streams. So, there wasn't that need there as well, but we're like, well, let's leave it there, and that's there for a rainy day. And if a really good opportunity comes up, well, then we'll do it. But it wasn't just, like refinancing thing for the sake of doing it all the time. Right.
Yep.
But Russell, I'm curious, a couple of things on what you just said there. First is, what is one of your favorite ways to control expenses? You probably have 1 thing or 2 things that come to mind or something when you talk to people. And the second question I have after that question is, why do you think, and you reflect back, did you not sell the properties sooner? You said you held on to some properties. What was it? Was that just, what was it?
Yeah, I'll answer the second one first. And really, upon self-reflection, it was an insecurity to admit that something didn't work. Mm-hmm. And I 100%, I am open and authentic about telling that I would, damn it, I'm going to make this work. Yeah. I'm going to keep doing this. I'm going to make this work. Damn it, I teach this stuff. I'm going to beat it, right? But it was just an insecurity to tell people that this asset that we bought did not perform what we thought. The market turned. This is what it is. Unfortunately, I've done everything I can for the last 7 years. Wow. It's time to sell. But I had an insecurity of being able to have that conversation, and insecurity, maybe I wasn't tough enough. I didn't have the courage enough to have that difficult conversation. And because I'm a people pleaser, right? Sometimes you want to sit there and you always want everything to go well. And I got these people into it, and damn it, I'm going to just keep working until it works itself out. And that really was what it came down to, as opposed to just sitting there going, here's what it is. here's the truth about it. If we want to keep going, it's going to cost more money to feed it. If you're not willing to do that, then we need to sell it. As I'm not willing to do it because I'm putting an awful lot of time into it. I put a lot of capital into it. It's going to cost more money to keep hanging on to it. It's going to cost a lot more time. And I'm recommending we sell this and move on to something else.
So is that what you would tell anyone today who might be a little bit over leveraged if they just can't, if they're putting more money into it?
Yep.
Than they're
I would be honest. Just be brutally honest about it. And especially if you have conversations with people with money partners and things like that, just put it on the table and don't, it's not a sign of failure if you have to go back to an investor to potentially that they have to re-up with some more capital and things like that. It's not a sign of failure. But if nobody's willing to do that, you have to move on. It's time to move on, right? I guess out in the, what do they call it out? Either got a fish or cut bait is an Atlantic term, right? So,
okay, so
that's one. And then so the cost cutting.
Yeah.
It's not just any one thing. It's everything. And the main thing I tell people is to start paying attention, because during really good times, we actually get a little bit complacent. The $80, $180 furnace filter change bill that you had at the property manager was in there, or things like that. They just start creeping in. The costs start creeping in. So then you just have to start paying attention, because what you measure, you improve. So you get into each and every one of them, and then I literally tell people, go line by line. Like literally, your property. Like let's take property tax for example. Right? Are you paying attention to what your valuations were this July of your properties? Because next year when the property valuations come out and you get your new tax assessment, check your valuations. It might be way out of whack. It might be worth you to go fight that and get your property tax down.
Yeah,
right?
Got it.
Negotiating with contractors, negotiating again with property managers. Like I had a conversation sitting there with my property manager, and I say, look, these things, the water's coming in on the boat here. I can't keep getting it out. I want to keep working with you. I truly want to keep working with you, but I can't afford to paying this. Is there something we can do? And they go, Russ, you've done very well. You've helped us extremely. You've built our business. You've probably referred 15% of our clientele. We'll give you 6 months free property management.
Oh, wow. Yeah.
Right, during the time. So just going to each of the service providers, every line by line on your expenses, and is there something you can do about it?
After when you went through that and you realized that maybe you used too much leverage at that time, we have one of many other friends actually, but one friend's coming to mind in the US that went through that as well. And then after they went through and they kind of had to get rid of a bunch of their properties, they weren't investing for cash flow at all at that time. They were just investing for appreciation.
Get 0% down, buy a house, it goes up 100 grand or 50 grand.
Yeah. So, but they've now gone almost to the extreme, to the other way, where they don't use leverage for anything, and they're investing kind of really, small properties there, and they don't want to use any leverage. They're just going the exact opposite. I'm curious where you're at now, because you mentioned something before too, at acquisition phase. Yeah. Like us too, when we were younger, we're like, well, yeah, I mean, can I give you $5 and give me a property? Like, I'll leverage whatever you want. So I'm just curious, as you've gone through that stage, and as well as your stages of life, where do you sit with that type of stuff now?
Where I sit with that now is, so I go back to, so the mistakes I made was I bought a lot of properties in bad areas with bad tenant profiles, and just kind of ran numbers, didn't really kind of take the next step forward. So the two models that I do now is I buy new, we build new purpose-built rental properties is what we do, and more importantly is multi-residential.
Okay.
Yeah. House with suite, you call them duplexes out here, side by sides with suites, and then front and backs, and it's like Lego.
2 to 8 units typically.
It's typically 2 to 16.
16. Okay.
Yeah, and depending on the land positions and the lots and stuff like that. And it's just but the main reason I do that now is I start with the tenant. I start with the customer, and I've identified the customer that I want to have in my rental properties. I start with the ideal tenant profile, and then I match that tenant to the area, to the right property, as opposed to buying cheap in bad areas and taking whatever tenant I can get. And then lo and behold, I have gunfire, I have squatters, I have, you name it, have gone through it. So the simplest answer is I've just started buying quality properties and quality areas, and I started with a good tenant profile. And they do need to cash flow on at the beginning. Not a lot typically, because a new construction home,
you have expense
and there's not a lot of time involved with it. But over time, the rents go up quite a bit on a newer place, and the expenses are extremely low. And where we are in our properties in Alberta, I think we're still under rented, like significantly under rented. And I just took on some of them 17, 20% rental increases in the last year. Right.
There's so much that you shared there. Well, why in Alberta do you think you're under rented there? You just think that it has a more of an upside. Everything is going right now for Alberta.
Well, two things. So number one is I go back to the tenant. What can they afford to pay? And by and large, people in Alberta make more money. They keep more money because of the tax implications. So their rent to income ratios are in line. But I mainly just look at it from a standpoint as, and I'll take Edmonton and Hamilton as an example. I would say fairly similar kind of cities. One has about 500,000, one's 1 million plus.
Definitely offended one of them. But
right.
Someone got pissed off right there.
I think Edmonton.
We kind of agree. We kind of agree. But you pissed off someone.
But
one has Connor McDavid, just for the record.
Exactly. Well, I got a cool analogy I'd like to share with you about the Canadian economy, but we'll talk about that later. So here's the thing, and I was just chatting with a guy yesterday, and he was telling me that. And I was at his place. It was a 1950s duplex, and they're getting $3,800 to $4,200 for all in with everything. For a brand new place in Edmonton, we're pushing maybe 32, like brand new. Like I'm talking new car smell.
Yeah, wow.
When they move in, and I sit there and I go, there should not be a $600 to $800 difference between Hamilton and Edmonton at this time, right? And one of the reasons being is, we can go on a different tangent here, but rent control in Ontario is, every rent control market I've ever been into, the rents are ridiculous.
It distorts the market.
It 100% doesn't. And I don't know why these tenant advocacy groups want rent control.
They don't understand economics, Russell.
By putting rent control in, you've actually hamstrung the tenants. In a free market economy like Alberta, rents are lower, and you have to compete with the other players in the market.
I think basic economics should be taught in grade school and throughout high school, because you're right. We get these advocacy groups that just don't understand how a free market works. So then when they layer in regulations on a market, the distortions that come from those regulations, they don't understand what's happening because they don't understand the free market. You kind of have to understand a basic understanding of a free market, and then maybe layer in a regulation or two. But I feel like so many people don't understand the free market, and then just start throwing in regulations everywhere, and you get a Frankenstein economy.
Or maybe even better would be, instead of a regulation, maybe an oversight, like an overseer,
exactly,
like the landlord and tenant tribunal.
On your point earlier, though, something you said there's really interesting, that you're building this stuff new. We weren't in the position to build new, definitely not when we started, but what we figured is, like, we'll play in the starter home market category, but we'll position ourselves in the higher end of that band. And that got us the tenant that we wanted. So like, we would play in starter home market because that was very liquid. We always were thinking, worst case, what if we need to sell? So we're like, okay, that's a very liquid piece of the real estate market, but let's play in the higher segment of it because it gets us the tenant that we want, just like you're talking about. So that's kind of the way we did that. And then something else that you said is really interesting about, like, getting the kinds of tenants that you want. We had a lawyer once approach us with a property, and the numbers looked amazing. Nick, you're going to know the story I'm mentioning. And they're like, we looked at the address, and we said, oh my gosh, like, you definitely don't want to buy that property. Like, you want good homes in good areas. But the numbers were amazing. And many real estate investors, like, everyone's done at some point, the numbers look good and you buy. Like, we've all kind of...
We did that, overpay for a property. The numbers look good.
Wait a second, we have to renovate this whole thing? But we were like, you're going to get people with no bank accounts. You're going to get cash rent. You're going to have to be chasing people. It's going to be slightly even dangerous. Do not buy this property. And then he looked at us, he goes, well, what if I told you I had the types of people who were okay collecting rent like that? And I just remember thinking, oh gosh, okay, listen, I don't know what exactly you're alluding to here, but like, if you got the right people to collect rent in that kind of situation, I don't know, have at it. What do you want me to tell you? You know? So anyway, I guess the next thing I wanted to ask, Russell, is when you see people now, right across Canada with some kind of fear or panic in their eyes about the real estate market. What do you tell them on how, like, what kind of context do you build based on your past experience?
Yeah.
How do you help them think about today or what comes next? How do you approach that?
Well, and so I'll back it up with a couple stories. So story one, I was out at some networking events this past weekend, and everybody, wants to come up, and it's been, I haven't set foot in an airport in 3 years exactly. And I was just out of practice. I was like so awkward. I go, hi.
Yeah.
What do you do?
Welcome back to the real world. Yeah.
But people would get to a point and they would corner me and they say, Russell, when is the interest rates going to go down? Yeah. And I'm going, I don't know. And they go, what do you mean you don't know? Russell, give me a date. And like to a point where they were aggressively in my face. And I just said, okay, October 23rd, 2023. Is that, well, and they go, really? Why? And I go, I have no idea. I go, but here's the thing, is in some cases, the interest rate is relevant, but it's not relevant. Okay. And here's what I mean is, let's look at it from two sides. And then the same person then came up and said, well, but my expenses are going up by $100,000 on my interest and all this kind of stuff. And I go, geez, that's not good. What are your rents going up? And they go, what do you mean? I go, so you're looking at your expenses, but you're not looking at your income. Right now, rents are going through the roof with whatever market you're in. Especially if you can get a vacant unit or get a tenant out in this market, you can raise your rents significantly. So the comment I was telling people is, okay, and I broke it down into three kind of phases: short term, medium term, long term. Short term, I'm concerned. Like, be concerned, be very concerned right now that you need to get through this. You need to have cash on hand. Either it's cash or credit. You need some access to capital. Maybe you have to sell a place, pay off a place. If I sat down and did a portfolio review, we could really identify, and I guarantee everybody has something on their portfolio if they have a large portfolio, can get rid of. So short term, I'm concerned. And you should be too. Pay attention. But that's a good thing. When you pay attention, you start making changes. On a medium term basis, I'm optimistic. I'm hopeful, especially with some of the new things that have been announced out here in Ontario, with some of the density rules. Some of, there's still 1.5 million homes short in this area. And the current coach in place for the government is saying that we're going to be bringing in 500,000 of people per year. So it's going to be backfilled. So I'm optimistic on a medium term, and I'm very confident long term. Like, very confident that Canada is that safe haven. Canada is a safe harbor. In the world market, Canada is seen as that friendly place to come to. And we have an awful lot of things that the world wants right now. And we just need to, as a business entrepreneur.
I love that side. That's exactly how I feel. That's exactly
as a business entrepreneur, it just hurts me to know that we have things that people want to buy and we don't want to sell it.
That was going to be my question to you while you were saying that, but you finished it up. I was like, as an investor in the Alberta market, doesn't it frustrate the heck out of you that we don't invest in our energy sector?
Well, here, and I'll give you the analogy, and you brought up Connor McDavid earlier. So let's say Canada is a Team Canada.
I know who you're saying our coach is, and so I'm already revolting against the coach.
Well, sometimes you need to replace the coach, but we'll get there. So you have a Team Canada, and it's made up of all players across different positions. Everybody's got your stay-at-home defenseman, you got your backup goalies, you got your wingers, you got your scorers, and you have a superstar that's out there right now. The analogy I would use is the coach has two options. It is get that superstar to shine and bring everybody else up with that superstar, or tell that superstars, why don't you slow down a little bit, Connor? You're making Leon Draisaitl look bad because you're going so fast here. Why don't you just slow down?
He might feel bad too.
Yeah, he might hurt his feelings.
Yes.
Right.
So we sit there and I go, like, the Alberta government, they're doing what I would think they're being like a business. If they can't get the product out to Eastern Canada, they're negotiating with Saskatchewan and Manitoba to get a pipeline to the Churchill and send it out through Manitoba. They're trying to be proactive to just do to the business. And when you're especially we have what the world needs. We have food, fuel, fertilizer, fresh water,
everything,
forestry,
everything,
future tech, and family-friendly values, right? We have I call the 7 Fs that the world requires. And why aren't we as a country, as a team, being a reliable source of affordable all of that to the world, if not first to our own, what about to our own people? Like for Canada to have a housing shortage with as much land we have is just beyond me, for number one. For Canada to have a food inflation with the heartland that we have, for Canada to have fuel prices higher than anywhere, we're paying $2.20 some cents a liter out in BC. Like for even our own populace, like what they're doing in Alberta is the Alberta government is sitting there going, okay, let's make money. Let's sell our goods and services to the world that needs it.
Well, and then, slow down right there. Yeah. Let's make money. Yes. Let's earn more than we spend.
They had
Russell, slow down. Slow your roll, sir.
Okay.
Slow your roll.
Okay. You're telling Connor McDavid to slow down. Yeah. Right? They had a $14 billion surplus in their budget this past year.
Oh, wow. I didn't know that.
$14.3 billion surplus. So what they're doing with their surplus is they're buying down people's heating bills. They re-indexed all the provincial income taxes, which means that people will pay less income tax on a per basis.
Shame on them.
Yeah. And they have the lowest tax structure already.
How dare they?
Right? So
see, I thought
so the analogy to wrap up is the coach. If I was the coach, we need to.
Yeah, he didn't get to the coach.
We need to. Sorry for being political. There's a new coach in the waiting that I sure hope he becomes our coach, to get political for a second. And we need to ride the superstar up, and it'll bring everybody up at the same time.
The thing that blows me away is that we've, not only have we not invested for ourselves, we take the resources and we sell them to foreign entities. And then they take the goods and they process them and then sell them back to us as finished products. Yeah. Like, it's like this whole thing is so backwards. And on the energy sector, it's hilarious that no one talks about it. Like, people still look at, the oil in Alberta as just like evil thing. Yep. But for some reason, no one equates, pumping oil in Saudi to putting on a ship and shipping it over to Canada. They think that's like a green process or something.
The millions of barrels that we import.
Well, we take our old lumber and we ship it over to England. I think was this? Were we talking about this or someone else? We ship it over to England in wood pellets, and they burn it as fuel, and that's considered green energy.
It was like some environment they were getting. It was a company that was getting massive positive scores on their ESG rating, but it came out they were like a UK company that was cutting down pristine forests in eastern Canada and turning it all into pellets and burning.
Well, that's you hit the nail on the head. Is we have to virtue signal that we keep our ESG in line under certain thresholds, so that we can go brag to our other partners out there. I
think it's so twofold in Canada, because relative to so many other countries, what you said is right. Canada has all these wonderful things. And if you were a family in another part of the world, I could see the attractiveness to coming to Canada. But then when you've been here for some time, you can sound negative on the country because you see how easy some of the things are to fix. Nick and I looked at a stat, Russell, the other day that in Ontario, per capita, Nick, was it Ontario or Canada data, the hospital beds? The hospital
beds. It was broken up. I think we were looking at the Ontario ones.
Okay. So don't hold us to this. I think it was Ontario. I can't remember. But we spend, out of the 30 countries that they surveyed, including like Germany and Sweden. All
so then it probably would have been Canada.
I guess it was Canada.
Yeah, out of 30, we were 29, wasn't it, or something?
Yeah. And we spend the most per capita on hospital beds and doctors. And on those two categories, we were like 28th and 23rd. And I'm like,
how can we number of beds.
On number of beds we were like 28th. I think doctors per 1,000 people was like we were 23rd or something like that. I'm like, how are we spending the number one amount per capita on healthcare? Yeah. And we're not getting the 5th place on some of these things. We're getting we're in the 20s. Yeah. Like, what are we doing? So anyway.
Yeah, it just, really just need to get back to basics. Like, wants versus needs in many respects, right? And we just need to get back to, affordable housing, affordable fuel, affordable, fuel and energy, affordable food, and affordable healthcare. Right.
Well, so look, sorry.
Go ahead.
I didn't know. So this goes back to investing. So does it come back to, because you were talking about investing, you're like, well, everyone's looking for $100,000 in 3 months or the 1 year, and so 3 to 5 years it should take, and we agree with you. So does it come back to that? There's just such a small segment of the population now that is willing to look long term and go through short-term sacrifice or short-term inconveniences to fix things for the long term. Because I know politically, if you run on a platform saying, hey, you know what, we're going to do this in the short-term pain, long-term gain, it lines up to investors too. Because I think if you're, as a coach, as a real estate coach, the message of, hey guys, this is going to be successful for you, but it's 3 to 5 years down the line, is a much harder sell than, hey guys, you know what, if you buy this property, you can make $100,000 maybe in the next 6 months.
Yep.
Well, even though one of them is the real and the proper message, is that the problem, that it just kind of just goes beyond real estate and everything else?
Well, it comes back to most people's expectations. It comes down to just managing expectations and coming down to really just kind of your life, your terms. To steal a phrase that I heard popularized somewhere, I can't remember where, right? And here's what I tell people is, this is the opportunity for everybody to do a gut check in the marketplace. And this is all the people, a conversation I'm having one-on-one is we go back to your values, your vision, your goals, and we refresh all them. And I ask them a simple question is, how bad do you want it? Like, seriously, how bad do you want it? And if the answer hummed and hawed and stuff like that, well, that's okay. Like, your answer is your answer. But if you want this more than oxygen is to life, okay, we have to go through these cycles. This is just part of the process. And here's the good news. And I'm going to use a movie analogy. You guys familiar with Forrest Gump?
Of course.
One of my favorite movies of all, top 5 for me. There's a scene in there where Lieutenant Dan and Forrest Gump are out on the shrimping boat, the Ginny, and they weren't catching any shrimp, right? And stuff. And it was just going there. And all of a sudden, the storm hit. And Lieutenant Dan had a reckoning with this baker. Remember this. And he's up in the crow's net. And making have his reckoning.
I think he tied himself to the mast.
And right? And then after the storm passed, the Jenny was the only boat left on the water. That's and then right. After that, the shrimping got real good. Yeah. So gang, we gotta get it through this short-term storm, because on the other end of this, there's going to be a cleansing. There's going to be a, pardon the graphic term, maybe a flushing of some things. And if you're still standing after this is all said and done,
yes,
and you got through it, you've got amazing life lessons that you will take for the rest of your life, but you will be one of the only ones standing. And in this business, it's funny, I was chatting with Derek Foster. You would know Derek, the stock dividend guy.
Oh, got it.
Retired at 34
years ago. Yeah.
He said, what other business other than investing is that as you get older, the better you get and more wealth. If we were like professional tennis players or something like that, our career would be done at 28, 29, maybe 30.
That's true.
And Warren Buffett's 92 and he's better than he probably was when he was in his 50s. So as you learn these lessons, if you've been at 25, 35, 40 years, you just become a better investor over the time, as long as you don't get kicked out of the game. As long as the kick to the where doesn't take you out of the game. Yeah.
That's a good point. So that person then that was asking you over the weekend about when interest rates were changed and stuff, I guess, for them, did you ultimately boil that conversation down to that, just survive?
Well, I said in the short term, the interest rates are going to do what they're going to do. They're probably going to go up again. I personally, and I'm on record this past summer, that I made a prediction of a couple things that are probably going to happen just based upon what I've seen. And so far I've been wrong, but I'm sticking to my prediction. Prediction number 1 is I believe that rates are probably going to start coming down mid 2023 and beyond, like start coming down again, because they can't keep going. The largest debtor in this country is the government, and how can they keep affording to make the payments too, is one. The other one is right now on a lot of variable rates, there's no discounts. And during times when the rates went up, I seen that they were coming out with big giant discounts off prime. I believe that they're going to start having those again coming back. So it's a way that they can, without lowering the prime, actually lower the effective interest rate. And you're going to start seeing longer amortizations. 40 years, 50 years, stuff like that. You're going to start seeing those. So you need to be able to manage your cash flow for probably a year to 18 months. And I believe that the rates will start coming down. If not that, new products will come on board to make more affordable. Like you can't, and you guys would know the stat better than I do, and I think I probably heard it from you guys, is it's almost like a ridiculous 40 or 50% of the Canadian economy is revolving around housing, like renovations, realtors, lawyers.
It's not coming to mind right now, but we know you're right. Yes.
Like I think Ben talks about that a number of times. Stuff. Yeah.
And you can't have an entire industry of the mortgage industry that's literally is not underwriting anything. Realtors are having a hard time doing any transactions, the renovations and stuff like that. You can't have one of your sectors
pulverized,
and it's almost like a game of chicken.
Totally. We're calling it a game of bluff.
Yeah.
It's like the government's trying to,
so it's like, who's going to blink first?
And it's spilling over into construction, which is obviously a huge one, because with construction, with where they are, a lot of projects are being shelved, and you're seeing the pressures off of trades already starting.
We are hearing from some of the general contractors that some of the subs on commercial business are now saying, hey, I'm not going to work on your project unless you pay me upfront for at least my material and stuff. In the commercial world, you do everything on terms.
Yep.
So the general contractors are like, well, we don't get, we invoice in stages. We don't even have the money until at least we're 30% through this. There's no way we can fund you to start the job. So the subs are coming back and saying, well, my credit line on my, that I'm running for this business isn't at the interest rate it's on it so high. I'm not taking your job unless you do this. So the construction industry all of a sudden is just grinding to this halt because everyone's staring at each other, pointing fingers saying, you pay me, no, you pay me. So the unintended or second order effects of just raising interest rates are we have construction, which is badly needed in all levels here in this country, starting to just seize up. And it's like, who is even paying attention to that? And then, Russell, my personal fear is, because I think I'm with you on that 18 month, that window seems about right to me. My personal fear, and something we talk a lot about here, is that once the psychology of a country is like, well, I'm just going to wait because prices are going to be lower tomorrow. Once that runs through a population, it is very, very difficult to reverse that type of thinking.
It's the wealth effect, right?
Exactly. So when people think, this might just rebound in 30 days when they cut rates, I'm like, I think it's going to take a little bit longer. So if they start changing rates in 2023, it's going to be a longer point of extraction to get people back to spending money. And we do agree with your amortization thing. I've never thought of the discount on variable. That's a great way. That's a really interesting point.
I've seen that happen I bought a lot of properties when prime was in the 6 range, and we were getting prime minus 1.5 off.
That's a really interesting thing. That's a nice little thing they can kind of sneakily use to keep rates high, but then kind of
they can rattle the saber of be careful, but by the way, we'll give you a discount.
Here's some cheap. The rates are really high, but look over here. The amortization thing, we're convinced that on the next election cycle, it'll likely be the Liberal government, I would imagine, saying, hey, to help the first-time home buyer, we're going to extend amortizations. And they won't call it extending amortizations. They'll just call it like they have the first-time home buyer affordability plan. Behind the scenes, you're in debt for 100 million years because it happens.
That and I honestly don't know why. One of the big things is everybody wants affordable housing. Okay, so in order to take the risk to build affordable housing, the developer and the builders, they need to make profit. It's not a 4-letter word. Profit's not a 4-letter word. So why aren't they giving really juicy terms or lower interest rates or something to a developer to maintain their margins? A developer would love to be able to provide affordable housing, but I can't afford to build an affordable housing unit unless I get some subsidies or I get a better terms or I get interest free for a little bit or something, right?
It just shows the challenges of trying to manipulate a country with one monetary policy. Like for so long, for a long period of time, maybe it made sense to continue to have low rates in Alberta. For example, there was a depressed market for a long period of time and prices hadn't been coming up and you were looking to attract capital and attract labor force there and that type of stuff. But in an area like Toronto or Vancouver, we didn't need them. No. They were too long for too long.
It was gasoline.
It was a problem. So you're right.
You don't think prices are going to go higher? Watch this. We'll drop rates even more.
Well, one of the things I'm very mindful and I'm paying attention, and I haven't seen it yet, especially out here in Ontario. I would be a little bit more bearish if I was starting to see a whole bunch of listings come on the market. And if the market was starting to be flooded with listings, then I would be, let's pay attention to this. But right now, so it's prices are always...
Yeah, we're 2.5 months of single...
Prices are always sticky on the way down. So there's a whole bunch of people that had their property probably for sale, and they say, oh, well, I'm not going to get that ridiculous price. They'll just pull it off, and we'll sit tight for a bit. The listing inventories are not growing. That's one of the things I saw at Alberta at the time when it started turning. Properties were being put on, the inventory was growing, and all that kind of stuff. So just be mindful of your supply and your demand in your areas. And that's why I'm hopeful and confident out here in Ontario in the market is there's backstops to it for the population, the shortage of housing, and people need to still live and
there is an actual need for housing. It wasn't just a want. You're right. And for anyone listening, I guess what Russell was saying is that part, that's a key indicator for us, like months of inventory, which we're sitting on. Condo market in Toronto is like 3.5 months. Single family homes like 2.5 months. That's still low inventory. It's not until you get to like 6 months or higher that it really starts changing the pricing mechanisms in the market.
Well, the one thing that I am paying attention to, and it's just because of conversations I've been having with people, is what I call the speculator pre-sale condo buyers that bought a place for $800 thinking they're going to flip it on assignment for $1 million when it closes. And I think there's more out there than we know. I had a conversation with a person that had 4 of them, and her plan was to buy one, and they were staggered 4 over the time. She had a big giant deposit on each of them. She was going to flip the one and take the one from the other and then just keep rolling it in. And she would not be able to sell her first one for what she has a contract on it for.
Yeah, I think you're right, 100%, especially in the condo market. And we saw that in, I even remember that in the, I guess, late 80s, early 90s when they were in that crash. I specifically remember around Square One, because when I started looking for properties, whenever I was 20 or something, I started looking at the condo prices there, and I looked back on them and I'm like, wow, these things really, that's the segment of the market at that time. And there was more overbuilding at that time too, but a lot of these things have been gobbled up by people that with not too much intention to close, or maybe they were okay closing for a period of time, but they don't have the ability to close now because of the new cost. So that I agree is going to be interesting.
Well, then even if you dive deeper into it, and so then the conversation is, oh dear, are you able to close? Well, if I did, it would be probably another $3,000 negative cash flow, or I've just made that number up. On top of if they already had a portfolio that was been squeezed, all of a sudden now you add this another albatross, an alligator around your neck. Something's got to give.
I think if we see weakness with inventory, I think it comes. I think that's going to be a driver from the condo market first, for sure, just because the numbers there.
And it's something to just pay attention. That could be the canary in the coal mine to just be very mindful of. So far, not seeing it, but just be vigilant is what I would say.
Russell, you're going to be around this earth for many more years, decades. What do you think you want when you reflect back on your life? What do you want people to think about, do you feel right now? And I know that can change. So let's say you're 92 years old, reflecting back on your life. What do you think?
Can you turn up the volume there, Sonny?
Yeah. What do you want people to say about Russell Wescott? What comes to mind?
Oh, well, great question. So I'm going to tie it. Let's do a bookend here. Let's tie it around to my original story with at age 30. Getting some counsel from Oprah and deciding to take things to the next level. So I just recently in 2020 had my 50th birthday, another birthday that ends in a 0, and reflected back upon things. And I go, what have I done? I've done a lot, done that. And I've left a lot on the table I have more to do. I have more to give. And at that time, it was late November, it was right around this time in 2020. And I wrote down a goal. It scared the crap out of me, and I have no idea how I'm going to do it, but I'm committed to doing it. And the goal I said was I'm going to help 1 million people, 1 million real estate investors with the tools and resources to help them buy one more property. Then it's an example and an exercise I get people to walk through is what is one more property worth to you? Like if somebody said, tell me your last property you bought it for $400,000, here's the rent. And then I walk it through, let's say 15 years, you had it free and clear and it didn't go up in value. You have a $400,000 asset that probably generates, $4,000 in net income to you. So one property is worth $400,000 and 4,000 times 12 is almost 50 grand, right? So one more property to you is worth $400,000 and 50 grand. would you like to have a tool and resource to help you buy one more? And that's my goal, is to help that level and help that many people with tools and resources to just buy one more place.
Very cool.
And that 50 grand in 15 years might not be able to buy you much, but
well, it'll be inflation protected. It'll be inflation protected.
Well, if it's attached to the rent, you'll get your 1.7%.
Okay, so then I got one more for you then, Russell. So we often say, hey, you're never going to time the market. Get in, look at the numbers, income, and stop talking to me about the price. What's the income? What are my carrying costs? My risk is the interest rate. Let's analyze the global macroeconomy to see if we can control that. What are my income and what are my expenses? And then hang on for dear life, because it's going to be a ride. It's not going to be straight up. It is going to be a ride. I think now people are starting to understand that. When someone hears your message today, what could you tell them to say, get started today? And this isn't coming from like a sales point of view, but like, because right now people might say, oh, Russell, I'm just going to hold off. What would be something? Would it be, hold off for a little bit? What would you tell someone today about getting that one first property or one more property?
So I'm going to tell a story and succinctly answer it. I'm going to say I would suggest get some help from somebody who's been through this. Don't go alone. Like, that's one of the biggest mistakes I made too, is hiding, going alone. I know better.
Oh, really?
It was one of the mistakes I made early too, was, I went to events all over the country. I learned from Dan Kennedy's and Ron LeGrand's. I kept learning, and then all of a sudden I became the known person on stage, and I stopped doing what got me my success. So lean more into your coaching, lean more into your training, lean more into your learning.
Super valuable.
So that's the first thing I'd say. And then the story I'm going to share is make sure the assets that you're buying, and I'll tell it with a story of a client of mine in Calgary. He's buying a flip project in Calgary, and I can't remember what he paid for it, but he got it on a decent price through a wholesaler. He took 4 weeks he took some time off work, and he did his own work. His fiance borrowed the money, and they used her as the private money, paid her the private money fee, has the realtor, and he got an offer within the first weekend. He's going to make about 20 or 30 grand, give or take, after it's all said and done. But he did it for the experience. But I wouldn't let him do it unless he had 2 backup plans if that flip didn't work. So backup plan number 1 is, if you can't do it, can you refinance it and get a tier 1 lender on it? And can you then rent it out and still cash flow if you need to wait a few more months and even a year or two? And he said, absolutely. And then the backup plan after that is, would you guys want to move into it? And they say, absolutely, we would definitely move in. So they had 2 backup plans. And then so he got into it with the right intention. He did it for the experience, and he had 2 backup plans. And then after that, I gave him the blessing. And I said, go forth. There are opportunities out there all the time. And no matter whatever the market conditions are, whether it's recession, rapid growth, there's always a market to add value. If you're adding value to the system, adding value to the chain, you are recession proof. Mm-hmm.
Agreed. Great stuff. So Russell, where can people find more about you? What are you up to? Tell us.
Well, the simplest way, the hub of everything is russellwescott.com. And I often make the joke when you type into Google and you start typing Russell West, usually Russell Westbrook comes up first. I'm not him.
Oh, really?
And when you do find that, you'll get the joke. He's a big, giant basketball player.
That Westbrook. Got it.
So russellwescott.com, that's where everything revolves around. I have a podcast, enjoy my YouTube channel, and just try and take a page out of the Rockstar book of what you guys do. You guys are trailblazers and just trying to keep up.
Thank you for that. And I just want to say that it's really cool having, more, you've been doing this for so long, but you're sharing good information. You're kind of doing it from, your experience. And I appreciate that, just being as someone living in this area, knowing that there's others out there that are trying to have each other's back and help people and guide them. I just think that I get the benefits of what you're doing on a secondhand basis, because you're helping people. And if you help someone's lives, they go into the economy and help someone else. And then maybe I bump into that person and they're in a good mood, and it trickles all the way back to what you did with them. And I know that sounds crazy, but I just feel if there's a lot of us out there helping people as much as we can, admitting that we don't have all the answers, but doing our best to try, it really makes a great kind of community. So
and to the easiest way, and somebody asked me once, well, how are you going to do that million goal that I talked about? Well, the simplest way is to train one person at a time, and then hopefully all the people you train and inspire, they then go exponentially help other people at the same time. That's the way you do it.
Russell, keep going.
Yep,
keep going. We'll have you back. We'll have updates. We'll get updates for you. Thank you for that.
Yeah,
so thank you.
Appreciate it.
Hey, thanks for tuning in. You can find every new episode of the Your Life, Your Terms show on all the major streaming platforms. So Spotify, iTunes, Google Play. And if you'd like to get free copies of some of the books that we've put together, like these right here, or some of the reports that we've put together, like these right here, you can find all of those at www.rockstarinnercircle.com. That's www.rockstarinnercircle.com. That's it for now. Until next time, your life, your terms.